Welcome to the Small Axe Podcast. It's your boy Nico, the multifamily family man. We are going to talk about everything regarding multifamily real estate investing. Stick with me. This podcast episode is going to be epic. I've been thinking about something over the past few months, maybe even longer. I just don't think that this market is separating good investors from bad investors. What I really think is happening is that it's separating investors from actual operators. So for years, buying apartment buildings just wasn't enough. You looked smart if values kept rising, if interest rates stayed low, let's say, and if the rents continued climbing, which was literally happening like wildfire, no pun intended, with the current wildfires going on from, let's call it 2013 to 2022. Crazy. But today, that's just not enough anymore. You have to know how to operate. You can't just go in there blindly making money and having the market cushion your fall, save you, and uplift you. It's not the case anymore, guys. If you're not operating, you're failing. And if you don't love operating like me, then you're screwed. So from 2020 through 2022, almost everything was working out. And you know what's funny and silly is that people were complaining back then too that no deals worked out. So between 2020 and 2022, it seemed that basically any deal would work out, all because of the market. We saw 16% year over year rent growth in Tampa, Florida for 2 years. There was more than that in some places. And it's crazy. So the market was really helping people get by. That with the really low interest rates that we had and the cap rates compressing, refinances were easier for people. People were able to sell or flip multifamily properties, kind of unheard of in the multifamily space. And a lot of the mistakes that people made then got covered up just because the market was moving in their favor. Things were a lot easier back then. But that doesn't mean that people were bad investors, right? It just means that the market was forgiving. Everybody was succeeding. Excellent investors, excellent operators, and poor investors and poor operators, let's say. Not necessarily to the same degree, but the issue was that the market was helping people, not your skill set, not the time and effort and labor and work that you put into the deals, but the market and other factors that were kind of out of our control. And today, everything's a lot harder. We have headwinds in front of us. Insurance is way higher, guys. Basically, wherever you are in the United States, insurance is higher. All expenses are up. For me personally, down in Florida, I'm getting my butt kicked from the crazy property taxes and insurance that have gone up. Maintenance expenses are higher. Interest rates are obviously higher. And people complain and talk about it all the time. Collections are a lot more challenging today. People are feeling the pain. People are losing jobs. Yes, people are still moving to growth markets like Florida, but people are losing jobs. It's a big issue today. Residents are under pressure, and competing with A-class properties, me being a C-class owner operator, is challenging. If somebody can get a beautiful brand new 2-bed, 2-bath for, let's say, the same price that I'm offering an old 1970s, perhaps a bit dated product, people are obviously going to choose that A-class property. And it's all because we're absorbing the units that have come online over the past few years. So it's really hard to compete with A-class. And I don't know how A-class is surviving if they're charging those lower prices or giving concessions of 2-3 months. It's wild out there today. And I'm not trying to say that this has never happened in history, right? There are cycles, there are market cycles, and we just have to understand that. We have to grow with it. We have to flow with it. We got to just go with it. And today it's really important, though, to understand your business plan and to be flexible and pivot if your business plan needs to change. For example, if your business plan is to go in, renovate units to a certain degree and raise the rents, you might not want to do the same level of renovations, and you might still be able to get some sort of a rent bump. And you might want to save those funds for a rainy day or for when the market cycle turns and you can get a higher rent bump and a better return on your investment. So today is all about being dialed in, understanding what's happening in today's macro economy, what's happening with our residents, what's happening with expenses, insurance, taxes, What's happening? How can we compete with the neighboring properties to win market share and to get people in our units, to get good paying residents that want to live in our apartment buildings? It is very tough. And today, if you want to be a real operator, you really, really got to just be all in on this. And I hate it. I don't want to be an operator, but I have to. And I will never stop being an operator for my investors and my investments personally. I'm in this, guys. So what do I have going on? All right, let me just recap what is going on in my personal portfolio and my life with investing. Now, you all know, if you've been listening, that I have two refinances going on right now, very close on the 6 unit Baker Street. It's just so ridiculous how we can't get that to the finish line. And I'm doing everything that I can. A bit frustrated with it, obviously. And now I don't like the way the terms are going. However, we're going to get through this. Then I have the refinance on the 13 unit, which is, I'm actually getting a little bit closer to where I need to be. My current issues with that is whether or not I'm going to qualify with the net worth and liquidity for the particular loan that I'm looking for. I actually have really solid rate and terms on that particular deal as well. And I'm very excited about it, but also nervous and apprehensive because, again, I might not qualify for the loan. And it actually doesn't have to appraise at the level that I thought that it did in the past. So I'm kind of happy about that. But we're struggling to get the right proceeds amount anyway, which is another story. So I will talk more about that in the coming episodes because that we're not that close on yet. And I might wait a little bit to improve 2 units, renovate them that are coming due this month, and then potentially up the rents and get a higher valuation. But either way, I'm working through both of those and it's very challenging. And there are other people on my team that just don't want to sign a loan. So if you are a true operator today and you are truly operating in the best interest of your investors, you're going to have to put some things on the line. I have to sign on recourse loans. I do it all the time, and I am not afraid to do so because this is my livelihood. This is what I want to do forever. I am an owner operator. I am an investor. This is what I do. And then we have the potential sale of Goodyear, which I mentioned to you, our 28 unit, which is not happening. We actually accepted that offer of 3.85 million, which again was $200,000 above what we paid for it. But the potential buyer is kind of getting cold feet and not really responsive. And that just is not a good sign of somebody that is going to be aggressive and move forward and actually close on the deal. So we will probably lose that or pass on that as well. And then finally, we come to Valrico, our fix and flip property, which is a mess. We're going to just cut our losses here and try to sell it either at break even, hopefully, or take a little loss on it and move on because it's occupying way too much of our time and not worth it anymore. So we're also pivoting and potentially switching property management team for a variety of reasons. Love my property manager. Obviously, he is a partner and friend of mine, but we might have to switch, which I will share down the road if it actually happens. We are looking at walking all of the units more regularly to get a closer feel for what the tenants are doing inside their units and handle any small maintenance issues before they even report them or before they become big issues. We're discussing so many different options for reserves in the bank to make sure we have enough reserves moving forward, even talking about lines of credit or things that we can kind of have on hand. And I do that. I have business lines of credit that I will occasionally utilize and put to work. We're working through all these refinance, like I said. On top of all this, my insurance broker, who has been the man, got some norovirus or whatever. He was out of commission for 10 days. And I had to have things handled for the refinance and other renewals coming up. And it was very scary. I actually reached out to his wife, worried about him, and she got back to me. Thank God he's okay. But it's like, this is just part of what we deal with every single day, guys. There's so many different things that people have no idea about that goes on all the time. And I'm handling it. And again, one of my investors on my 6 unit and then on my 13 unit was initially a general partner on my 6 unit, doesn't want to do that anymore because it's just work involved. So he realized, hey, look, my role is better as an LP. So on the 13 unit, he invested as an LP. That's awesome. And I love that mindset. And that's what happens in this environment when there's so much operating to be done. There's so much on the line. It is literally a 24-hour, 7 days a week job. I don't take vacations, but if I do, I'm working as well. So I still love acquisitions. That is my favorite part of this game. Oddly enough, it's a very short window of action for me, right? So it could be a few months that I'm doing acquisitions. Then you got to own it for the next 5 years or so, right? So operating is really 95% of the game when my acquisitions, the part that I love most, is maybe 5% of the game, 10%, but it's okay. But all that said, there is some encouraging things that we can talk about. Operator markets like this, like we're in today, can create opportunity for sure. Weak operators will eventually sell, foreclose, fail. Some owners just get tired of it. I'm tired of it, but I just have a relentless, crazy drive and attitude to keep going. Some owners run out of liquidity. Some owners don't adapt. Some get discouraged. Some walk away. Some just fail again, like I said. And that's when the disciplined operators like you and me can find opportunities, not because we're smarter necessarily, not because we're better even necessarily, but because we're ready and we're still in it. And that is important. You guys need to remain in this game if you want to be successful. Buying apartment buildings, guys, is an event. Operating apartments is literally a career. And you have to understand that you really got to feel and know that. Hope isn't an operating strategy either, guys. You can't just hope things are going to go well. And you could in 2020 through 22, not today. Anybody can look like a genius when the market is going up. But the investors that build lasting businesses, the ones that learn how to operate when things get tough. It is very important to continue on when things are tough, because dealing with these challenges is what is going to create long-lasting careers in this industry for you, me, our friends, our family, and our communities, so that we can be successful owner-operators moving forward. And at the end of the day, gang, markets are always going to change, okay? Interest rates will rise. They will fall. They might rise way higher than we want them to. They might fall crazy amounts. We're going to take advantage and capitalize on everything. We also have to know that insurance costs will fluctuate. Cap rates will expand and compress. But one thing never goes out of style, guys: being a great operator. If you can learn how to execute when the market gets tough, you will be in a position to thrive when it gets easier again, which it will. Thank you so much for joining me today on the Small Axe Podcast. Your attention truly means the world to me. Please leave a rating and write a review. Also, share this episode with somebody that you think could get value from it. Remember, it only takes a small axe to build a lasting empire. So get out there and start building your own.